The S&P 500 just hit the 98th percentile, and the S&P at this level has historically marked a regime inflection. Something is breaking beneath the surface, and the data confirms it. Right now, 10-year yield is at 4.47%, the 95th percentile for the past year. Historically, the 10-year at this level reprices every leveraged asset in the economy, says the data needs to confirm. The commodity analyst says, "We are in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this month." The commodity analyst has been right for 148 straight days. Here is the full scoreboard. The commodity analyst is right, and the data keeps proving it. Oil at $101. 148-day streak, score 1 for the volatility expert. Volatility expansion. VIX agrees at 17.3. 5 days running, the dollar analyst dollar milkshake higher call is paying off. Gold at $4,562 and trending their direction. 3 days running, McElroy is waiting on confirmation. The narrative holds, but the data has not validated it yet. 147-day streak, too early to call Hartman right or wrong. The thesis is building but not confirmed. 141-day streak, Gammon's call is not working. For now, yield curve moving against the bearish thesis, up 6.4%. Bad stretch for Snyder, for now. Yield curve at 0.50% says the opposite of dollar liquidity crisis. Score today, 3 right, 2 early, 2 wrong. A streak this long means the trend has legs, but long streaks end eventually, and when they do, the reversal is sharp. Today's big question, are commodities in a supercycle, or is this the top? On one side says, the data needs to confirm. That is the setup. Everyone hears it on the podcasts. It sounds convincing. On the other side, the commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Here is what the data says. Oil at $101, 95th percentile, down 0.1% today. Gold at $4,562, 69th percentile, down 2.5% today. Copper at $6.29, 98th percentile, down 4.2% today. Bottom line, the data is split. Neither side has a clear edge, which means the resolution is coming soon. If oil drops below $80, the supercycle call is in trouble. Right now, it is at $101. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $101 is in the 95th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,562 will track it daily on the scoreboard. None of the 7 are talking about this next signal, and they should be. High-yield spread just dropped 2.1% to 276 basis points. A move this size demands attention. Historically, high-yield stress at this level signals institutional risk aversion building. None of the 7 are talking about this. Keep it on your radar. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 74 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment-grade spread crossing 150 basis points. Currently at 76 basis points. Pace is flat or improving, no urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, copper-gold ratio flashing red. Gammon says the Fed is breaking things and credit spreads will blow out. The data disagrees with that thesis right now. Phase 1 holds with 74 basis points of buffer. Conditions favor risk but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. NE, days on market, is spiking in Lincoln. Days on market in Lincoln moved plus 100% in 30 days, now 151 days. Buyer leverage score, 5100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. WI, days on market, is spiking in Wisconsin Rapids. Days on market in Wisconsin Rapids moved plus 100% in 30 days, now 192 days. Buyer leverage score, 62/100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. Dukes, MA, payment burden is past the breaking point. Falmouth, MA, median home about $1,453,000 on about $74,000 household income. Price to income ratio, 19.7. When the math stops working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle? Or is this the top? Let me show you what happened the last time we were here. Copper at $6.29 is in the 98th percentile. That means it is higher than 98 out of 100 days in the past year. In 2022, copper dropped 35% on China lockdowns and global recession fears. In 2020, copper crashed in March, then doubled over the next year on stimulus demand. In 2011, copper peaked above 4.60, then gave back 30% as China growth slowed. Different environments, different catalysts, but every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, oil at $101 is in the 95th percentile. The last time both copper and oil were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. History does not pick a winner here, but it does say the resolution is coming soon. Be positioned before it arrives. Here is what the data says to do right now. Stay alert on VIX. It is dropping 3.4% today. Fast moves demand attention. Avoid Phoenix at 41% payment burden. That is stretched territory. Watch high yield spread. It dropped 2.1% and nobody is talking about it. Every signal is live at analyze.builderslens.com. 7 speakers, 65 signals, 1 question every morning. Who is right? Subscribe, and I will see you tomorrow morning.